Ladies and gentlemen, today we embark on an intellectual journey into the heart of our financial system, guided by none other than Lord Mervyn King, a man who stood at the helm of the Bank of England during one of the most tumultuous periods in modern economic history. The End of Alchemy, Money, Banking, and the Future of the Global Economy isn't just a book, it's a treasure map that leads us to the buried truths beneath the global economy. Let's dig up the top 10 insights from this modern day economic odyssey, shall we? Insight the first: banking, the alchemy that needs a philosopher's stone. King posits that modern banking is akin to medieval alchemy, trying to turn lead into gold. Banks are endeavoring to create money out of nothing, a process deeply embedded in our economy but inherently unstable. This alchemy stems from their ability to create loans and thus deposits, which multiply the money supply through the fractional reserve system. And like alchemists of old seeking a universal elixir, today's economists seek a formula to prevent financial crises, a kind of philosopher's stone for stable growth. Insight the second: radical uncertainty, why we're all Magellan, not Newton. King boldly rejects the idea that the economy behaves predictably like celestial bodies in an Isaac Newton universe. Instead, he advocates that we are all explorers in uncharted territories, akin to Ferdinand Magellan. We face radical uncertainty, events that are outside the model of the world that we've built, which are not just unknown, but unknowable. Our economic models, equipped with averages and assumptions, often fail to predict financial storms, let alone navigate through them. Insight the third: the prisoner's dilemma, no man's financial island. The famed prisoner's dilemma, a stalwart in game theory, is readily applicable to world banking, King argues. Banks operate in their own interest, striving for private profit, which sometimes undermines the stability of the entire system. This collective action problem shows that without enforced cooperation or regulation, individual rational actions lead to a collectively adverse outcome, a financial crisis where, in the end, we could all be sentenced. Insight the fourth: the disequilibrium mantra, an economy that doesn't add up. King challenges the traditional economic concept that markets always clear through a balance of supply and demand. He introduces the disequilibrium mantra, observing that persistent imbalances, such as trade deficits, income inequality, and asset bubbles, do not self-correct as swiftly or efficiently as traditional models suggest. This disequilibrium is like walking on a tightrope without a net. Eventually, the walker stumbles, and the economy falls into recession or worse. Insight the fifth: lender of last resort, a tale of firefighting. Central banks, King details, are like the fire departments of the financial world tasked with dousing the flames of financial panics. They should act as lenders of last resort, providing liquidity to prevent a bank's collapse. Yet this engenders moral hazard. Banks might take on more risk, expecting to be saved. Thus, the firefighter could inadvertently be providing the gasoline, financial relief that encourages risk-taking and leads to larger infernos. Insight the sixth: the great imbalance, a global game of teeter-totter. King draws attention to international trade and capital flow imbalances, suggesting that the world's economic powers are on a teeter-totter of surplus and deficit. These imbalances underpin the 2008 financial crisis, with surplus countries like China lending vast amounts to deficit countries such as the United States. The global financial system, he argues, needs a rebalancing act, or we're all at risk of falling off the playground apparatus. Insight the seventh: central bank credibility, trust in an age of skepticism. In King's view, central banks are facing a crisis of credibility. The public's trust, once given freely to these institutions, has been shaken. They need to do more than manage monetary policy. They need to rebuild faith in the system. However, the cloak of mystery that often surrounds their actions does not help. A new covenant is needed between central banks and the public, one that clarifies the responsibilities and limitations of both. Insight the eighth: the pawnbroker for all seasons, King's new financial paradigm. King doesn't just diagnose, he prescribes. He proposes a pawnbroker for all seasons, a new role for central banks where they stand ready to lend against collateral, providing liquidity not just in times of crisis, but at all times, aiming to diminish the allure of alchemy. This creates a safety net without encouraging recklessness, And by setting clear, pre announced terms for lending, it reduces uncertainty and the chances of bank runs. Insight the ninth: breaking up is hard to do, the too big to fail conundrum. One size does not fit all in banking, according to King. Massive banks that are too big to fail pose systemic risks. When a behemoth is on the brink of collapse, it drags the entire economy with it. The solution may be breaking up these financial titans, or at least ensuring that they can fail without taxpayer bailouts. It's like unwinding a tangled mess of headphones. Careful, patient work is needed, but the result is immensely satisfying and functional. Insight the 10th: a blueprint for reform, stirring the policy cauldron. King's parting wisdom is a call to action. He proposes a reform blueprint, a set of principles and policies capable of reshaping the financial landscape. This includes changing incentives for bankers, imposing stricter regulations, nurturing financial innovation responsibly, and embracing international cooperation. Only then can we move towards a more stable, equitable, and resilient global economy. King's The End of Alchemy spells out a path that leads away from the dark arts of banking as we know them and toward a financial renaissance. It's a call for a paradigm shift, the echoes of which continue to resonate in the halls of central banks and global summits. So, saunter we must, with perceptions widened and with the knowledge harbored from this modern financial oracle, toward a day when the risk-laden alchemy of banks transmutes into the predictable science of financial stability. May these insights be the catalysts that precipitate that transformation. After all, isn't a world without financial crises a gold dream worth turning into a palpable reality?